This video is not on something medical per se, but it is on a basic explanation of how medical insurance works in the US in general. There's certainly going to be some variations in various insurance plans, but what I want to talk about is really predominantly PPO plans and how they work. So PPO plans start off with a monthly premium. A premium is something you pay on a monthly basis to the insurance company, whether you use the insurance or not. This is what, when you sign up for a plan, it shows you on the screen. And this is something that people always talk, oh, I'm paying $500 a month or $1,000 a month. That is your premium. What that's getting you is access to a PPO plan, which is a preferred provider organization, which means that you have access to generally a larger range of doctors than your HMO plan. Now, there are four main components to a PPO plan, the terminology that you have to understand: copay, coinsurance, deductible, and out-of-pocket max. The copay is something that you pay when you go to see your doctor. This may be different depending on whether they're a primary care or specialist, and they can be variable. Sometimes it's written on your card, insurance card, sometimes it's not. So don't be surprised if a specialist is collecting a different kind of copay than someone else. Just know that your insurance does require that copay to be collected when you check into the doctor's office. So it is not a matter of whether the doctor collects your copay or not. It is actually part of the requirement that you pay the copay when you go in to see your doctor. Okay, and most people understand the copay really well. This is kind of what they expect to pay when you go in to see a doctor. Coinsurance is the percentage that your insurance will pay after the bill and the claim has been submitted and it comes back. This is the percentage your insurance company will pay on behalf. So if it's a 10% coinsurance, that means you pay 10%, they pay 90%. The third one, and perhaps the most misunderstood and the most frustrating one, is something called a deductible. Deductible is what you pay out of pocket first for the year for any covered service. This is confusing because people presume that the word covered means no out-of-pocket charge. That's not what covered means. Covered means that your insurance company sees this as a medically necessary procedure, and so they're willing to either apply your deductible to it, or if you have no deductible, it's already at zero, that's when they kick in with their part of the payment of the coinsurance. So deductibles are perhaps the most important aspect you should be looking at when you select a plan, because that actually tells you how much you have to pay out of pocket first before insurance kicks in. So when someone tells you this is a covered service, you have to know whether you've met your deductible or not to determine whether you will have something out of pocket. And this is one of the most important nuances in US healthcare and insurance. So for example, you have a procedure done that costs $100 and you have a $20 copay and you have a 0% coinsurance, so you don't have to pay anything technically. So you're like, great, I paid $10 copay, that must be how much I have to pay out of pocket. However, when it's billed, say your deductible is $500, you pay the $100 still in full. And this will vary depending on the insurance rate contract with the provider, so the charge is not as important, but the point is you'll still have to pay the difference completely because your deductible has not reached zero for the year yet. Usually it resets at the beginning of each renewal cycle, or usually end of each calendar year, and it resets at that time. So usually January through March is when your deductible is the highest, which is why people often end up paying more out of pocket first, and then toward the end of the year, once they meet the deductible, they usually don't have as much out of pocket. The last one is called out-of-pocket max. This is how much your total out-of-pocket costs, right, should be before you don't have to pay anything anymore. When you've reached your out-of-pocket max, it means that at this point, you don't even have to pay your copay anymore. Remember, not the deductible. If you need a deductible, you still need the copay. But if your total for the year, you've satisfied your out-of-pocket max, then there should be no additional cost to you on the remainder of any services that are covered for the rest of the year until it resets the following year. Usually out-of-pocket maxes are extremely high, $10,000, $12,000. You don't want to be hitting this, ideally, if you don't have to. But if you end up hitting it, just know that oftentimes you do not have to pay your copay at this time. But deductibles you still do, and you have to be really careful when you do a procedure in the US of a covered procedure that you know your plan really well, all the components of it, so you know that you will be responsible for what portion of that particular procedure. Hope this is helpful. We'll have more sessions on understanding insurance, understanding doctor's visits, and these are one of the things that hopefully is one of the most helpful things for you if you are on an insurance plan, how to select your insurance plan.